Tecnotree publishes Q4 results on Wednesday. Now it's Friday, and we are here to discuss the results and outlook. As usual, we have as guests CEO Padma Ravichander and CFO Indiresh Vivekananda. Welcome.
Welcome. Thank you, Ronnie.
The Q4 results a bit later, but first start the interview with your release a while ago of a deal in the US, which was a major milestone for Tecnotree. So you announced a deal with a Tier 1 operator in the US, and of course, I am as an analyst, and the investors are of course interested in knowing more about the deal. For example, the deal size, with who the deal is made, what products and services does the deal include. You might be, of course, a bit. You might have some limitations on what you can say, but what more can you tell about the deal at this stage?
Thank you, Ronnie. Of course, it's an important milestone for the company to enter the US market. It was a very strategic move on part of Tecnotree to decide to enter the US telecom market after we acquired the assets of Cognitive Scale for the AI/ML capability to be embedded on our stack. We entered the market in late 2023, set up an office in Dallas, and the investments that we had made in our products, the standards to conformance to TM Forum and the ODA architecture, the ease of use of the stack, having more than 4,000 features that are pre-configured on the stack, and the ability to train systems integrators on the stack so that they can actually implement the product for their customers were all part of the overall strategy that we built as we entered the US market. We also had a lot of postpaid features that we had developed and prepaid features, and also features for both consumer and enterprise side of the business for telecommunication industry. So we built a strong moat and made an entry into the US market with an SI partner. And I'm proud to say we won a Tier 1 telco for our digital stack, certain products out of our digital stack. It comprises of product licenses and services, and it's an SI-led strategy. And I really believe that this is only the beginning of a good entry into that market now for us.
To tell anything about the size of the deal at this stage? If not, then that's okay, but if you can give any indications.
Well, it's a deal that will cut across 3 years. Okay, obviously I cannot comment on the size of the deal. It's a significant deal, and it is part of our digital strategy and digital stack. And I believe that this is an entry point, and more of the digital components from the stack will be put to good use as we continue to work with the SI and this customer in the United States. So I'm quite keen for this business to grow. It is showing good signs of growth at this point in time.
Thinking about the profitability in general, are there significant differences in profitability in deals from the North American market compared to developing countries in terms of margin profile?
So you have to know that we built our products in emerging markets, and therefore, we are highly competitive in terms of product pricing in mature markets. It's definitely an advantage for us. I do believe it's in the US, it's not so much about profitability, but it's more about making an investment that we had made earlier and getting tangible results from that investment. And it's also about entering a market with dollar-denominated revenue, which is definitely going to improve, our overall risk. It will reduce our risk, currency exposure risk overall, and that is extremely important where we stand right now for us.
And also, just to add, Ronnie, the more you have such currencies, it will reduce the stress for both us and the analyst in comparing the constant currency, real currency, and all that stuff which we face today.
We've already shown in our results that we have reduced the exposure to frontier markets and reduced the forex currency risk significantly in 24. And our journey and this entry into the US market are all part of the strategy to further expand our footprint and reduce currency risk in our business.
Already talked about it a little bit, but can you clarify still your sales pipeline in the US going forward? So should we expect more deals like this in the future?
Obviously, I cannot disclose the sales pipeline, and I'm sure you know, but I do believe we have a very strong set of opportunities in front of us, and I'm quite excited about what is available to us in terms of penetrating into this market. Quite excited about it.
Good news going forward from there. So we can move on to the Q4 numbers. So if looking at the top line, revenue came down quite significantly in Q4, also in constant currency. So if you could go through the drivers here and how big impact did, for example, timing effects have.
Okay, maybe I can take this question, Padma. Rani, yes, in constant currency as well in the Q4 of 24, we had lower than what we had achieved in Q4 of 2023. In fact, I want to take it in two things. One, just if you look at Q4 as an isolation, the revenues were lower. But I suggest or we wish that we take the revenues over a period of time. Earlier, as you know, that our revenues always used to be cyclical. We used to have one very large quarter and then it used to come down and again go up and again come down. If you compare the last 2-3 years revenue quarter on quarter, you had that sort of such high peaks and low. In 2024, if you look at quarter on quarter, it has almost been stable and almost at the same level right through the quarters. This, I think, is a very significant point to be noted. And again, in 2023, now Q4, we had certain license revenues, the method which we are following earlier, where the revenues, we had large chunk coming from the revenue from the licenses, and the delivery of those projects were completed in 2024. So I believe rather than looking at only one quarter, if you look at the year as a whole, you will find that we did lose about 10 million of revenue in currency exchange between constant currency and the real currency. And having moved to the ARR, where 42% of my revenue today are coming from ARR, there will be a stability, but in the initial stages, there will be a lower growth. Yes, in absolute terms, we did have a lower revenue in Q4, but I do not want to wish to see it in isolation. I wish to see more like it's a more stable revenue across the different quarters.
You had also said as we move to the ARR model, revenue becomes more predictable, but the peaks and troughs of revenue should also get normalized. So you're starting to see that pattern emerge.
And going into the EBIT level, we saw there a great improvement. So could you go through on a general level what drove this significant improvement?
Probably I can answer that as well. We in Q2 of 2024, we announced a major cost cut measures, which would have given us the benefit in H2 of the 2024 and also full year benefit in 2025. As a result of that, originally we had anticipated a cost saving of 4.5, but we were able to achieve much more than that, and we achieved about 6.9 billion cost reduction. That substantially helped to improve our EBIT. Plus, we also started more and more doing up nearshore delivering closer to the customer, optimizing our headcount and payroll overall reduction, and also reduction in our consulting and professional charges. All of this cost reduction helped us to have a great EBIT. And there are the big reasons for a higher EBIT in this quarter.
There's also some, you could say, exceptional items in the cost structure. For example, materials and services. One was 1.3 million positive. So what was behind this?
Yeah, I think it's more of a timing in the accounting. In Q3, if you had seen under the same materials and services, we had a 2.7 million cost booked under that. There was excessive provisions that were made in that particular quarter, Our normal cost in material services is much, much lower than that. Some of the provisions which we had created in 2024 Q3, we realized are no longer required, and all those provisions were reversed in Q4 2024, which created this unique situation of having a positive balance in an expense account.
There was also one-time negative item of 4.4 million in Q4 regarding receivables from sale of assets. So could you walk through more specifically from which assets were these and how are you planning to, how much of these receivables are still left?
Sure. This is, as we have also clarified in our financial statements, this is related to a sale of a business asset in Q2 of 2023. We did have a customer who came into the Tecnotree fold after the merger that happened in 2008 with the Livetree company in India. This customer we have been servicing since 2008, and in 2013 we started realizing that this customer is very difficult to provide service because of the geopolitical situation, war-like situation, the political unrest, the global issues with that customer. We decided to exit from that customer in Q2 of 2023. And when we exited, the total receivable from that customer was 15.6 million. By beginning of last year, 2024, this had come down to 10.6 million. We had a constant interaction with the customer to collect the entire money. And in the end, they had given us a proposal to pay 3.3 million right away out of that receivable. While we have not closed the negotiation, but as a prudent and conservative accountant, we wanted to make a provision for that. This 7.3 represents in Q4, we have made a provision of 4.4, and in Q3, you had a provision of 2.9, totaling to 7.3. So this is against this discontinued business in Middle East region.
It's also a sanctioned country, and I don't know if you remember, Tecnotree previously had a similar situation in Libya. We had, receivables due of 10 million. It took us 4 years to collect about 6-7 million, but we never gave up. While we have made adequate provisions, which is the right thing to do from a financial perspective, our efforts to collect the full amount will continue even in 2025 to the extent feasible, given the geopolitical situation. We are continuously in talks with the customer, and we will continue to pursue to see how best to recover.
Of course, the one-time items related to these receivables were affecting the EBIT level, but now the adjustments were made below the EBIT level. So what was behind this change?
This is basically as per the IFRS 5, and we sought an expert advice on how to deal with any expenses or provisions on discontinued business. IFRS 5 talks about the accounting treatment for discontinued business, and this is a provision against the discontinued business. We are advised not to treat it like a normal operational expenses and show separately below the EBIT. Based on that advice, this has been disclosed separately below the EBIT.
We can move on to the outlook and guidance. So you're expecting low or moderate single-digit revenue growth, even though, according to analyst estimates, the BSS market will shrink this year. So can you talk about the drivers here?
Yeah, I'll take this question. Right, Ronnie. As you know, Tecnotree, at least over the last 6-7 years, has always outperformed the analysts' predictions for the market. We have always performed better than what the market growth rate has been, and we will continue to strive to do so by increasingly taking market share away from our competitors. We believe strongly we have a very good product. We have made early investments, early CapEx investments, and created a moat of over several thousands of features, 4,200 features, many of which are highly configurable. We have also partnered with many SIs to scale our businesses in different mature markets. And we believe our stack is fairly stable and has a very competitive pricing policy around it. And therefore, I believe we will have the early mover advantage in some of these areas. Additionally, our investments into AI in 2022 with the asset purchase of Cognitive Scale was also a thought leadership, because we believe there is a tremendous opportunity for operators to be a game changer in the AI business, given the fact that they have vast networks and several terabytes of data at their disposal across the globe, and the ability to monetize the data using AI models and create more predictive and more intuitive types of insights and information is going to expand their footprint into the global markets in terms of going beyond connectivity and monetizing data to create a breakthrough in the industry. So there is a huge opportunity for telecom operators with AI, and we hope to definitely partner with our customers to achieve their success in that area as well. So AI is definitely a good opportunity at this point.
Expecting the EBIT margin to still improve this year, even though it's already on a very high level. So I assume the cost rationalization program plays a big part here.
Yes.
Go ahead.
Yeah. As I mentioned earlier, we did announce a cost-cutting measure in Q2 of 2024. And our plan was that would have given us a 4.5 million savings in H2 of 24 and a full year reduction of 7 million in 2025. We are on target to achieve it. Yes, the cost rationalization will play a big part in the 2025 EBITDA as well.
Maybe the most interesting part of the guidance is the cash flow guidance, and you improved that slightly for 2025. So maybe first, what made you lift the guidance, and what factors are still decreasing the cash flow when compared to profit levels? So do you still expect the working capital to be tied to the balance sheet this year, since the capex levels are also coming down quite significantly?
Yes. So probably I can start, Padma. Ronnie, first thing is, while our guidance on revenue and EBIT are on constant currency, our guidance on free cash flow are in real currency. As we know that in the last 3 years, Tecnotree had a free cash flow positive in 2022 Q3 of about 5 million. And then onwards, till Q1 of 2024, it had a continuous quarter-on-quarter cash negatives. Even the one quarter in 22, which had a positive cash flow of 5 million, in the next quarter, it fell to about 6 million negative cash flow. The trend has been like that. The business has been like that. It is highly cyclical as far as the cash collections are concerned. So that is the reason we want to be a little bit conservative. This is the first time where the Tecnotree has achieved free cash flow positive for 3 consecutive quarters. And we are still in the frontier market. We are not yet completely exited. There is a history of cyclical cash coming in. And more than anything, we are still in the beginning of 2025, and we want to be conservative in that. We have provided a minimum guidance of 4 million euros
in real cash.
In real cash currency. And as the years progress, probably depending on how we perform, we will revise the guidance as and when if required.
Estimates, do you see the year 2025 as an exception in terms of positive free cash flow, or do you see the cash flows kind of growing in the coming years, of course, naturally, without giving a formal guidance at this stage?
We have, taken very, very stringent measures in terms of physical, operational capabilities that were implemented in financial control in 2024. When we saw the foreign exchange losses happening in the first quarter and the first quarter having a negative cash flow, we immediately, and we also saw the slowdown in the revenue growth, we immediately implemented a cost-cutting measure, and we announced a 4.5 million cutting cost reduction. We overachieved that, and we actually delivered 6.9 million of cost reductions. So the marginal cost investments on products has been stabilized and reduced. CapEx to revenue has also been lowered, and we have new targets to achieve. And all of this has been done in order to improve quarter-on-quarter positive free cash flow results. In fact, I will now say the free cash flow being positive every quarter is in the very DNA of our systems and operations as a company. Okay, there's no going away from it. It's not a seasonality. It's not a guidance for a year. It is how the company is going to operate and perform going forward. And all of the management and leadership and the board has signed up to this operational model. And you will see more of our focus gearing towards ensuring a positive free cash flow quarter on quarter as being a mark of our success in our operations, and also the agility of our operations going forward.
A lot of cash flows in the future. I thank you for your answers and hope you all the best for the year 2025.
Thank you.
Thank you, Ravi.